joining us now. And I am curious your reaction. Why are markets up if the Fed is shifting upward its expectation of terminal rates?
Yeah, I think there was a lot to unpack there. I think, Lisa, I was listening to the show earlier, and you pointed out that Powell was unwilling to commit to July. He called it a live meeting, which I think makes sense, but he didn't want to lock himself in. And I think the equity market might be saying, gosh, maybe we got off easy. There could have been an even more hawkish outcome. Look what happened with the dots. And now Powell is saying, okay, that's not baked in the cake. So I think your analysis earlier was pretty spot on.
At this point, was that a failure at a time when inflation has been sticky? Or is the Fed seeing something that perhaps others are overlooking in terms of how quickly this economy is seeing disinflation?
I wouldn't call it a failure, and I don't know that they're seeing something that other people aren't. I think one way you can interpret the rates market reaction, which is, say, not fully pricing in what the dot plot says, is the market understands that the Fed's decisions will be dependent on the incoming data, and I don't think the market shares the view that inflation is going to be nearly as high as what the Fed's written down. Their forecast for core PCE inflation at the end of this year went up by a sizable amount. Looking at my colleague Ellen Zentner and her team's forecast for CPI inflation, just the next print that we get next month, it's going to be really, really hard to get anywhere close to the Fed's core inflation forecast for this year. And so if we're right, and if the market's right on where inflation is going to go for the next print, boy, the committee probably will be singing a different tune. And I think that's part of what's going on. Powell actually, I think, did a reasonably good job keeping that hawkish option there while not having a hike at this meeting.